Hey YouTube, every month for the last close to 1.5 years, I've been chronicling my portfolio on my channel. This is probably the most important video I do every month because ultimately it comes down to how much money I make. And I'm glad to report the portfolio has been doing very well this year. Let's take a look at the holdings, let's take a look at the returns, and let's take a look at how our portfolio compares against the best ETFs and the best fund managers out there. Let's do that now. So this is how the portfolio currently looks like. Amazon, Facebook, and Google have done well for me so far. From day one, almost 1.5 years ago, they have been my top 3 positions. Today, they make up about 44% of the portfolio. My top 9 positions, which are all these positions right here, make up about 72% of the portfolio. There's a surprise entry this month in my top holdings. That's Upwork. Upwork has done very well over the last few weeks. It's taking advantage of the trend towards remote work and also the fact that there are more freelancers and more employers looking to hire freelancers on an ad hoc basis for work that can be done remotely. I expect this trend to continue. Personally though, I don't want Upwork to become too big of a position in the portfolio because it's still a small cap and it's still a company that has a lot of competition out there. So I might decide to sell a covered call for one contract on Upwork to take some profits off Upwork. Some of my moonshot stocks have also done quite well. Trilio has done well and Beyond Meat has done well. As mentioned, these are stocks that don't necessarily fit my strict criteria of a good long-term investment yet, but so far they have done very well. They are stocks that I place small bets on, but they have done well and have proven themselves so far. I'm also very bullish about these stocks over here, Adobe, PayPal, and Autodesk. Together they only make up about 4% of the portfolio so far, but I think over time they will likely take on a larger allocation in the portfolio. You can see that I also have a lot of ETFs in this portfolio, and I think that's a smart thing to do as well. I have the S&P 500 at about 2%. I have the Nasdaq Triple Q ETF at 1%, IGM at 1%, IGV, which is a software tech ETF, at 1%, and a semiconductor ETF at about 1% as well. Together, these ETFs make up nearly 6% of the portfolio. These ETFs are do nothing, know nothing alternatives to picking stocks, and I feel confident about them in the long run. Not everything has been going well for the portfolio too, though. I've had some disappointments. Booking Holdings probably one of the biggest disappointments this year so far, and probably Boeing as well. But I can't blame them. They have been subject to the worst kind of crisis due to the pandemic. But I do expect that over the coming months and quarters, as travel resumes, as some sense of normalcy returns to the world, I think these stocks will come back. I also have some other stocks in the portfolio which I don't plan to add anymore, which are these stocks here highlighted in blue. But I keep them in the portfolio as a reminder that I should focus on more higher quality and higher growth companies. Other than Welltower, it's very unlikely I will add to any of these companies. I suppose the thinking originally when I decided to invest in these companies was that they were undervalued, but they became even more undervalued. Some of it is due to no fault of their own, like in the case of Expedia, but some of them are just not as promising as some other stocks I own. So the total cash value has skyrocketed to about 229,000 over the last month. The last month, and in fact the last 2 months have been very good for the portfolio. And so far, our year-to-date performance is about 15.19%, not too shabby, and I'm quite pleased with it. Some of you who follow the channel closely might be wondering why the performance for this portfolio is much better than my eToro fund. I think there are two main reasons for it. One is that I use a little leverage in this account. I sell put options and then I use the premium from those put options to buy even more stocks. This is something that I do not do for the eToro fund. But I think the bigger reason was that in January for the eToro fund, I was still setting up the portfolio. In January, I felt valuations were a little high and I didn't go all in on the portfolio for the eToro fund in January. So I missed some of the returns that those stocks had in January when we were not completely invested. But now that the portfolio on eToro is fully invested, I expect the returns to be much more similar going forward. What do you guys think about my portfolio? Are there suggestions you have for stocks I should add into this portfolio? I am looking at other stocks all the time. There are stocks like DocuSign, for example, that I'm still researching, and maybe one day I will add to the portfolio. Let me know in the comments if you have any suggestions. Next, let's take a look at the activity in the portfolio over the last month. I haven't really done anything over the last month or over the last 2 months, in fact. I did most of my buying towards the end of March when the market was tanking. You can see that I got some dividends. I made one deposit here and I made another deposit here. But pretty much I didn't do anything else. These are the open put options that I have currently open, and they stand at about 6,700 plus. Eventually over time, I expect this amount to come down. Some of these put options might get exercised. One that's coming up is Brookfield Asset Management. If the stock price is lower than the strike price of $33 plus, then I may have to put up some cash for the assignment of this put option. As mentioned in past videos, I want to be a bit more careful in terms of using put options, and I'll probably only use them after a major crash rather than in anticipation of a crash or just on dips. I made a mistake with Carnival, and so we'll see how that turns out when the time comes. Next, let's take a look at probably the most important thing, how I have been doing compared to the best ETFs and the best funds out there. So we have the S&P 500, the Nasdaq, IGM, VJT, Berkshire Focus Fund, and the Barron Fifth Avenue Fund. Let's take a look at how I have done. So the Barron Fifth Avenue Fund and the Berkshire Focus Fund have both done about 15% year to date. IGM is about 7.87%. VGT is about 5.29%, along with the Nasdaq. The S&P 500 is still negative for the year at minus 5.70. So this is probably one of the first time I am beating everything. I'm beating all the ETFs and I'm beating all the funds. I'm beating Berkshire Focus and Barron Fifth Avenue only by a sliver, but it still feels good to beat them. Am I beating Fundsmith as well? That would be the icing on the cake. Let's take a look. So Fundsmith has done about 7.11% this year. So I'm beating Fundsmith as well. Thank you. I have done it so far. But the journey is still early and we still have a very long way to go. I hope I continue to make good long-term investments and that my portfolio continues to grow. If you would like to be a patron and a supporter of the channel, jump over to our Patreon website and you can subscribe to one of our membership levels. You can also gain personal access through me and also my immediate thoughts and actions in the stock market through Discord at about $5 per month. We look forward to seeing you on the Discord chat. So if you like what you saw in this video, please give this video a thumbs up. Please subscribe to the channel if you have not, so for future updates. And if you like the general platform, the eToro platform, and you like the ability to copy good investors, I suggest you join the eToro platform. You can use my link in the description tab and you can even get an extra $50 to start trading. So thank you for watching. I hope you took away some good points from this video. I hope you stay with us on this journey, this long-term journey, and we'll see you in the next video.